are a startup company and you want to raise funds from investors, large investors who can invest big money in your business if they like the idea. So normally they will give you an appointment so that you can present your idea to them, and if they like your idea, if they are convinced about whatever you are saying, if they think that this company has potential to grow, make huge amount of profit in the future, they may be interested in investing in your startup. So what these startup companies will have to do, they will have to make a presentation to the investor, that is called pitch presentation. They are pitching for the funds, and it has to be really good. It has to be so convincing that the investors should get ready to invest in your company. They should think, wow, this is the company I was looking for. So pitch presentation means you have to make a short and brief presentation, not more than 20 minutes to investors. If you make it too lengthy, of course it depends on the project, but usually investors will not have so much of time and patience to listen to you for hours together. So in the 20-30 minutes of your presentation, you have to give them idea about the prospects of the company, why they should invest in the startup business. You can use presentation in the form of PowerPoints because it will give them a good understanding of everything that you want to say, with pictures, diagrams, charts, graphs, and with a very effective presentation you can even convince the investors to put their money into your startup firm. So nowadays, because of internet, pitch presentation can be made online also using the live streaming websites. You can have online presentation on real time basis, or if required there can be a face to face meeting with the investors. So you need to do presentation before the investor, sometime customers. If you want to have more partners in your firm, then partners and co-founders. Methods highlighted below as to how to approach a pitch presentation. So this paragraph I found very useful because in future you or even I, if they will approach an investor, what are the things we have to keep in mind is written here, very well drafted. When you are making a pitch presentation, first you start with a brief introduction about yourself. Who are you? What are you doing? That means what kind of business you are doing. Who are you in respect to that business? What is your vision? And of course you have to keep it short and sweet. Get the opportunity, use this opportunity to get your investors interested in your company. That means in the first opening paragraph, opening remark only, you should make the investor interested in what you are saying. He should not feel bored or yawn, otherwise your whole presentation will be a waste. So in the starting few minutes, you have to tell him interesting facts about your business or that industry, and what are the important milestones you have achieved. So you can say we have already achieved 5 million subscriber, 10 million customers, we are operating in 500 cities, we have 2000 employees, our profit has been doubling every quarter, something like that. Of course it has to be true. Introduce your investors to your team. The success of a business depend on the people behind the scenes. So in case the startup firm has got co-founders, partners, senior executives or employees, you introduce your senior team to the investors. Investors are interested in knowing who are the people who are actually going to execute, deliver the product and services and make the business successful, you have to tell them about their qualification, achievement, experience and knowledge. This will create confidence in the minds of the investors. Then any investor would be interested in investing only if your business idea which you are proposing is going to solve some existing problem. That means in the marketplace there is some kind of problem in some area and your company is going to solve that problem. Then only you will have demand. For example, if students cannot go to the school, colleges, come out with an idea that they can study from their home. So my app or my website will help them to just log in and on real time basis students can study. So you are solving a problem. Okay. So identify what are the problems customers, users, people in the marketplace are facing and how can our business help in resolving them. So this way the investor will be convinced that yes, there is a potential demand for this product or service which is going to solve certain problems. Why Facebook became successful? Before Facebook, there was another website, social media website called Orkut, which was launched before Facebook and a lot of people were members of that Orkut. But then what Facebook did, it came out with new features. It gave it more professional and lively look. It was more vibrant. And then it became instant hit among the people because it was very user friendly, easy to use. Facebook company found that this Orkut has no private setting. Anybody can watch or do whatever they want with your Orkut profile. But then what this Facebook company did, people want some degree of privacy. So it added some privacy feature there and you can block people, outsiders from entering into your profile unless you permit them. So this way they started with something which were the need of the people who are on social media and that way it became very popular network. Now it is more powerful than some of the countries. And point number next is 4. After identifying the problem which customers, user, people in the marketplace are facing, you have to also tell your investor how your product and service is going to offer solutions to them. And what is important, the idea must help to resolve the problem in the most effective way, and that will make your product or service hit among the users and customers. Why Flipkart became very popular? So all of you know the story of Flipkart. It started in 2007 and they were the starting big companies in e-commerce. For your information, they only used to sell books online. If you want to purchase a book, you place an order and the books will be delivered to your home. But then people were not very keen on using debit card and credit card or online transaction at that time because it was treated as very risky. Once you give your credit card or debit card details online, the risk is that your data may be stolen, somebody can do fraud. So people were not putting orders even though this facility was there. How to sell? They started with cash on delivery system, COD. Now the people have confidence. Only after he receives the book in his hand, he receives the parcel, then he has to make the payment. So this idea really brought a revolution in e-commerce business where the customer will have to pay only after the goods were delivered. But then the next challenge before the Flipkart was there was a huge demand from all over the country. If your customer has placed the order, then you need to deliver him also on the time. So there was a need to create an efficient supply chain mechanism so that the goods can be delivered on time. And then they created their own supply chain management system. So now what happens, you will find companies like Flipkart or Amazon, if you place an order today, they may deliver the product in next 1, 2, 3, 4, 5 days. They will tell you also in how many days you will receive the order. And this way they resolve the problems of customer getting product at their home, okay, at lower price. You don't have to waste your time going to the market. You can see whatever you want, all options you have, and this way they are able to enter the market. When you are a startup company, the challenge would be to sell your product and service to the customer because nobody knows you. So in the pitch presentation, you have to explain how are you going to market your product, what is the market size, what is the target customer, how the promotions will be done, what are the various channels you are going to use to promote your products, what is the future growth of the revenue, market share, market size. Because having a good idea in today's world is not enough. The whole market is now crowded. Every product is looking for the attention of the customer. So therefore, in such crowded space, how are you going to sell your product and services? This is something one has to convince to the investors. If the company has already been in existence for some time, then you have to also give your profitability. In order to convince the investor, give them good information about what can happen to the future revenue. So give projections. Although it is difficult, but then without a very good projected revenue stream, investor will not be interested. If you are an existing company, you can show your growth. But if you are a new company, you do not have the past data, so then you have to create projected financial statement and show the growth. After looking at the projected data, the investor will know whether this company is really going to make profit or not. There are three types of financial statement you have to prepare. That is called balance sheet, income statement, cash flow statement. All of you know this. You are the champion of balance sheet, P&L account, cash flow statement. So what are these statements? I will not take much of your time. You have to prepare projected P&L account for next few years. Just like you prepare your project report, it is similar to that. As to next 5 to 10 years, what will be the revenue, cost, expense, goods sold. Maybe for the first year you can prepare month wise profit and loss. Then maybe you can prepare quarterly profit and loss. But as you go into distant future, you can prepare annual profit and loss statement. Then you need to prepare projected cash flow statement also. Profit is not enough. Profit has to be translated into cash. So how much cash inflow will take place? How much cash outflow will take place? All this will have to be reported in the cash flow statement. So the students who have prepared your project report in the offices, they know that these are the statements for next few years. We have to give it to the bank or financial institution for raising the project loan. You have to reconcile your profit with the cash flow statement also. Next is balance sheet. Balance sheet gives you the idea about the asset, liability and equity of the company. At one place, On a given date, you will be able to see what are the assets of the company, the liabilities of the company, and the equity. Typically, one will create an annual balance sheet for one's financial projections. Balance sheet can be prepared on annual basis instead of monthly or quarterly basis. Next is competition. You have to tell your investors that who are the existing players in that line of activity, because that makes a huge difference in your success. If your existing competitors are already big players in the market, then probably your investor may not be interested. Still, in order to convince your investor, you have to convince them why your products and services are different from the competitor. So even if there are big players like Amazon and you want to start a similar business model, why will investor invest in your company when Amazon, Flipkart, Reliance, Jio Mart is already there? Then how will you be different from them? That is something you have to think, and that will make the investors interested in your company. So one thing you can suggest, that if we have good money, we can even acquire many small competitors, and therefore to a large extent lot of competition can be killed and we will become a bigger company, and then we can match their expertise. That was just an idea. When you are going to do a pitch presentation, you have to tell the investors about your business model. What is your business model? So business model means how the company generates the revenue and how the company makes profits from its operation. Every kind of business that you start, there is some business model. So if you start selling online books, your business model will be that you will get commission, right? If you start teaching online education, you will get fees from your student. So something of that sort you have to explain. How is this proposed model going to generate income for the business? Because what is the point of doing a business if you can't generate enough profit? So here the presenter will have to explain about business model, which will include the purpose, process, customers, offerings, strategies, infrastructure, organizational structure, sourcing, trading practices, and operational process and policies, including culture. So this will all form part of your business model. See the example of business model. Two companies A and B are there. They are into the business of renting movies. So on DVD, they rent movies. Before the internet became very common in India, they used to rent movies physically. So you will see, or you may have heard, that there used to be video parlors where you pay 10-15 rupees and they will rent you a movie. So you can go home and play it on your DVD player or CD player or VCR, etc. And then you return the VCR or DVD, you pay the rent. So both companies were into same business, and the revenue was 5 crore, cost was 4 lakh, difference was profit. Okay, so this is 5 lakh. 4 lakh is cost of goods sold, because you have to rent the space, you have to hire people, salary, electricity, phone, paperwork. So you made a cool profit of 1 lakh rupees. But then what happened? Internet became very popular now. Each and every person has internet access. Company A changed its business model. It said, now I have to deliver movie to a customer. Why do I need to have an physical office, physical DVD, I can just allow him to download the movie and charge him the same fees. Customer is also happy. He does not have to travel to take a DVD on rent. So the revenue remained intact 5 lakh, but the cost of delivering the service is only 2 lakh, because you don't have to own physical space, there is no storage or distribution cost, and their profit is 3 lakh now. So by changing the business model, the profit increased from 20% to 60%. So if you tell this story to the investor, they would like it. And then financing. Investors want to know how much total funds you will need. Investor wants to know how much you have invested. Who are the other people who have invested in the firm? And how are you going to raise the finance? Investors like to see entrepreneurs who have invested their own money. So therefore, when you want to approach big investor, you must also have your own funds invested in that business. Then they will feel that you are sincere, you are committed to the task. Then if the promoter is pitching to raise the capital, he should tell them how much funds is going to raise and how is going to use that fund. So this was about pitch presentation.